Hi everyone, welcome back to my channel. Today we are diving into the latest stock market and crypto news following the FOMC meeting on March 20th, 2025. So let's start. First up, the Federal Reserve decided to keep interest rates unchanged at 4.25% to 4.5%. This decision has led to some market volatility, affecting both crypto and stock markets. The Fed is still trying to navigate inflation and growth, and these kinds of decisions are always have a ripple effect on investor sentiment and asset prices. We have seen these kinds of market movements before, especially after FOMC meetings, but it's important to remember that these fluctuations are normal. Wherever you're investing in the stock market or crypto, volatility is part of the game. The key is not to panic and keep your strategy intact. Chair Jerome Powell also mentioned that it's challenging to determine the exact percentage of inflation caused by the tariffs from the Donald Trump administration. This is a complex issue that the Fed is still grappling with. These uncertainties are part of the landscape we all invest in, but they also highlight why a long-term strategy is so important. Now, regardless of what's happening in the news, the most important thing is to keep investing in the S&P 500 or your favorite ETF through dollar cost averaging. With dollar cost averaging, you invest fixed amount regularly regardless of market conditions. The key is that over time this strategy smooths out the ups and downs of the market, and historically the S&P 500 has always recovered from its dips. Just think about it. In the last 50 years, the market has seen some serious volatility. We have had market crashes, recessions, and economic downturns, but each time the market has bounced back. The S&P 500 has proven to be one of the safest long-term investment vehicles because it's made up of the 500 largest and most stable companies in the US. If you stick with it through the ups and downs, history shows that you will be rewarded. Now, if you want a more in-depth look at how dollar cost averaging into the S&P 500 works and why it's considered so safe, be sure to check out my last video where I go deeper in the subject. I explain how important this strategy is and how, if you consistently invest over the long run, you can set yourself up for a comfortable retirement. It's not a get-rich-quick strategy, but it's a reliable path to wealth building. When it comes to crypto, it's a bit different. The volatility is much higher, and you should always invest only what you can afford to lose. But even with the volatility, there are still opportunities for strong returns in the long term. Personally, I focus on the main crypto assets like a Bitcoin, Ethereum, and Solana. These are the ones that have the most potential to be around 4 years to come, but again, remember that crypto is very risky. In my experience, having a balanced portfolio with a mix of traditional investments like ETFs and more volatile assets like crypto can work well, as long as you manage risk. It's all about finding the right balance and sticking to a strategy that works for you. Ultimately, the most important thing is staying consistent with your investing approach. No matter what the news says, whatever you are investing in the stock market or crypto. Over the time term, it's really hard to lose if you stay committed to cost averaging and focus on quality assets. When it comes to the stock market, there will always be ups and downs, but by investing in assets like S&P 500, you are betting on the overall growth of the economy, which has historically trended upward. With crypto, things are a bit more uncertain. But again, the right strategy, like only investing what you can afford to lose, will help manage that risk. So, whether you are focused on the S&P 500 or looking at the crypto space, my advice is to focus on the long term and stick with the strategy that help you build wealth over time. Dollar cost averaging into the stock market, especially the S&P 500, has proven itself to be a safe, reliable strategy for long-term growth. But remember, this is not financial advice. Always do your own research and make sure you understand your risk tolerance. But if you consistently invest, even during times of market volatility, the odds are in your favor for long-term success. Again, if you want more details about the S&P 500, dollar cost averaging, and how it can help you set you up for retirement, make sure to check out my last video. It's packed with more insight and how this strategy works. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update. Let me know your thoughts in the comments, and until next time, happy investing.